Well, good morning. This is April the 25th. I'm Pat McClatchy. Welcome to this weekly market report that's coming out just as exports come out. We're going straight to that. Have not looked at these yet. Cotton is net sales of 239,000 running bales. That's up 10% from the previous week, but 9% from the 4-week average. Turkey took 88,400. India took 74,600 running bales. Vietnam took 28,500 running bales. And we've got some new crop sales, 2019-2020, 48,900 running bales, primarily for Vietnam taking 22,000 and China taking 17,600. Shipments were down a little bit at 318,000 running bales. What have we done so far? Well, we hadn't had much time to react, but the market right now is slightly higher. Before the report came out, in anticipation of good numbers, which we got, cotton was up 52. Right now it's up 57. Next, going to soybeans. Net sales of 596,300 metric tons. That's up from the previous week and recent weeks, but that is up 57% from the previous week, but down 15% from the 4-week average in soybeans. We've got unknown destinations, 230,700 metric tons. China is back a little bit. China took 212,100 metric tons, and Japan took 52,200 metric tons. Now, soybeans before the report was up 1 1/4. Right now, they're still there, up 1 1/4 in July. Soybeans, corn. We've got the corn sales of 779,900 metric tons. That's down 18% from the previous week, but up 6% for the 4-week average. Japan took 349,400 metric tons. Mexico took 310,500 metric tons. Colombia took 117,400 metric tons. And we've got the corn market was down 2 1/4 before the report. It's at that same level right now. Wheat, net sales of 425,300 metric tons. That's up 34% from the previous week, but down 4% over the 4-week average. Mexico took 160,800 metric tons. Nigeria took 80,900 metric tons. And Mozambique took 52,800 metric tons. The wheat market has it's at the same place. July wheat was down 3/4 before the report. Now it's down 1. Let's talk about what's recently been happening. It seems that the agricultural markets have become very desensitized, especially in soybeans, to any thought that we could be looking at a trade agreement coming in the next couple of weeks. That's everything that's being said coming out of this administration. But the market has gone through this so many times over and over again, it just doesn't seem to have the effect on the market it used to have. So without that, we're looking at a big carryout. And that's what the market seems to look at. In addition to that, our old friend, the speculators, the large funds, have been selling this market any chance they get. So they're in I would assume, they're in a very large short position right now in the market. And as far as the trade agreement goes, the latest news that came out was an off-the-record comment that it looks like we are a few weeks or a couple of weeks from some type of an agreement. Our trade negotiations will be in China next week, and there was some hint that there might be something coming out from that. Again, market doesn't care right now. It's going to have to actually see it. And when that happens, I guess the question is, will we get a bounce? And the answer is we should. We should get an emotional bounce, if nothing else, to see short covering coming into these markets where speculators have been leaning on markets. So just talking about cotton, as far as what to expect there, we've got right now July cotton at 77.63, December cotton at 76.41. If we get a trade agreement, what will that do for prices? Well, the feeling for some time was you could see a rally in the old crop, or let's look at July cotton. It could take us up into the 82 or 83 level, possibly even in the 85 level. What would that do for new crop, for December cotton? Well, along with that, you could see it at 78, 79. outside chance of 80. So based on that, if we do get this, and we do get that kind of rally, what should farmers consider doing? Well, in cotton, certainly you should consider doing some scale-up selling or hedging of your crop. And analysts have differences of opinion on this, but we're right now, as I mentioned, 76, almost at 76.50. I think we got to 77.5 on this last run up. I would think you should consider in the December starting a scale-up selling program, whether it's in the cash market or in futures or options, starting at 77 and working our way up towards 79. Doing it in sections. That's what professional marketers do. Not trying to hit everything at one spot, but to scale up on that rally. And that's what would be recommended from most analysts. As far as grains go, not a lot to say there other than what I've just said, which is market has not responded. Soybeans are probably the most sensitive toward a trade agreement. It doesn't care in the least bit because it's heard this over and over again. It's going to have to see it. Right now, we've got November soybeans trading at 8.90 3/4, and even though it feels like a ways away, you still have to consider that somewhere just under $10 is break even. So I would think some type of a scale-up selling program that would need to start maybe at 9.40 or 9.50 and then scale up. We're a ways away from that, so we're anticipating we get a trade agreement, the market could get on up there. And a person should certainly consider doing some pricing on a rally. December corn right now is trading at 373 3/4. We would say there we're closer to a place to do some pricing or hedging, 390 and scale up from there all the way toward 410. What about July wheat? July wheat right now is trading at 437 1/4. And that would probably be, and this is a stretch, but 470 or 480 in the July wheat would be a place to hope for if we get a sudden surge in prices because of a trade agreement. So that's kind of where we are. One last look at these markets. We have backed down in cotton from where we were before the trade. We were up 52 before this export sales came out. Then we bumped up a little bit. Right now we're up 35. And December cotton is right now up 27. July soybeans were up about a penny and a quarter or so before the report. Right now they are up a half cent. Corn before the report was down 2 3/4. Was down 2 1/4. Now it's down 2 3/4. It's lost ground. July wheat was down before the report, down 3/4, down 1 1/4. Everything over the last 8 minutes has dropped. I think we'll probably find some support though, even though that is disappointing. So that's it for today. Thanks for joining us for this edition of our weekly Ag Market Network Market Report. We'll see you later.